Thinking Byzantine here, and today we'll be going over AT&T. Now, for a quick disclaimer, I'm not a financial advisor, and this is just on my own opinion. Your investments are your own responsibility, and it's important to do your own research before making an investment. The information I'll be using was from December 10th and before, and I do own a position in AT&T. Also, please like and subscribe for more content like this, and now let's get into this. Here are some stats and fun facts about AT&T. A previous close of around $30.69, a 52-week high of $39.55, a 52-week low of $26.08, a market cap close to $219 billion, dividend per share is at $2.08, PE ratio of 20.2. Modern AT&T was founded in 1983 when it split off because old AT&T was broken up. The ticker symbol is T, and there are around 7 billion shares outstanding. Now here are some recent news concerning AT&T. AT&T has sold Crunchyroll for $1.18 billion to Sony. AT&T has also been receiving bids for DirecTV of more than $15 billion, including buying its debt. HBO has added 4 million subscribers since September 30th, and they decided to release their 2021 movies on HBO Max at the same time as its theatrical release. Links for the articles are in the description below, and in the descriptions you'll find all the sites I used to make this video, like all the information. Now continuing on, what do? According to AT&T, they're a broadband connectivity provider. Our highest speed fiber and wireless broadcast networks connect people and business across the United States. As a software-based entertainment provider, we deliver compelling entertainment experiences through HBO Max and AT&T TV. Now here are the business segments of AT&T, with communications being its biggest portion, Warner Media as the second, and then Latin America as the smallest segment. These segments can be further divided up into smaller pieces, like Warner Media can be broken up into Turner, Home Box Office, Warner Bros., Illumination, and others. And the same thing can be done for other segments. AT&T is a bit complicated, which may be a reason why people don't want to invest in this company. But enough of that, let's continue on. Their most recent earnings numbers summarized. While they're down negative 4.8% year over year in revenue from around $44.6 billion to around $44.35 billion. Their net earnings per share has decreased from 0.94 to 0.76 year over year. The estimated COVID impact is around $1.9 billion, with mobility and Warner Media taking the biggest hit. Analyst projections on revenue for Q4 are at $45.4 billion. The current debt is close to around $6 billion, a bit less. And the long-term debt is over $100 billion. Now here's my bearish thesis for AT&T. AT&T has a large amount of debt as seen previously. DirecTV is a declining segment. COVID has hurt their movie production business, and there has been stronger competition with the T-Mobile/Sprint merger. And as said previously, AT&T is a complicated business with segments within segments within segments. Now for my bullish thesis, when COVID goes away, their segments should recover a bit, especially Warner Bros. And their movie making business. AT&T has been refinancing their debt at a lower rate, taking advantage of that low interest rate. They're streamlining their businesses, which is a good thing in my opinion. Makes the business a bit less complicated and easier for investors to understand. With a DirecTV sale, and they have recently sold off their Virgin Islands/Puerto Rican assets, and they have sold Crunchyroll. Also, they've been paying back their debt at a strong rate. They have a strong dividend yield, and HBO Max has been growing, which could be a source of growth for AT&T in the future. Now, this is my evaluation using dividend discount H model. So using the dividend discount model and setting the required rate of return weighted equal to the weighted average cost of capital of around 7%, then the adjusted fair value of AT&T is $39.29. And right here is the equation I used to calculate this. Now, with all that said, here's my evaluation based on thesis and numbers. With all that in mind, we can conclude that AT&T is undervalued as of now, and they can continue making progress with their debt and HPM Max, and I think this stock could be a buy. Though I want a degree of safety when buying shares of this stock, so it's currently trading a bit over $30. I think I would add shares if it dropped back to the $27 range. But what are your guys' thoughts on AT&T? And please like and subscribe for more of this type of content. And like I said, let me know what you think of AT&T. I think it's undervalued. What do you guys think? Anyway, have a good day.